Hi guys, hope you guys are good and welcome back to today's video, right? Where we'll be doing a weekly outlook video. So we will be starting on the DXY as usual, and then we'll move on to GBPUSD. And the reason for this is to set a tone for us into having to understand what we can anticipate in this week's worth of trading, right? So if you guys have been following me for these past few weeks, you'll start to see that the way I analyze is sort of like a narrative based sort of analysis, right? Where, if you open up a video I did like 3, 4 weeks ago, it's the same analysis and it's the same narrative that I've been speaking on, the same confluences in having to see price, for instance, draw it back to this mitigation block. And then we saw it eventually get there. And then off of this, we then anticipating price to continue to head towards buy side, right? So it's the same narrative, and we try to unpack it in that manner, right? So we'll be doing exactly that today. We'll try and use all these confluences into having to understand exactly what we can anticipate in this week's worth of trading. Right. So if you happen to find the information shared in today's video valuable, I would appreciate it for you guys on YouTube to subscribe to my YouTube channel. I'd also appreciate it if you'd follow me on my TradingView profile as well. And the reason for that is because I do release my day-to-day analysis, right? In terms of what I'm anticipating and what I'm looking to trade, right? And this would be very beneficial to you because of the fact that this that we're doing now is a weekly outlook video, right? And the day-to-day analysis that I release is, you know, pinpointing what I'm specifically looking at on that day. Because I cannot necessarily tell you what exactly the market is going to do on Sunday, Monday, right? I don't have any understanding of that. I need to also see and let price play out and then react based on what is given, right? So these day-to-day, you know, ideas that I release gives you an understanding of what I'm seeing on that specific day. So you can further investigate that on your own, right? But with that being said, let's get into it, right? Okay, cool. So on the DXY, right, we understand that for these past few weeks, all we've been seeing is that the DXY, in terms of institutional order flow, has been bullish, right? So if you guys do want an in-depth analysis on the DXY and having to understand exactly what has been happening on a grand scheme of things, I will attach a link uh, to that video into this one as well, right? So of course, like I said, the DXY in terms of institutional order flow is bullish, and for these past few weeks, we've been talking through how we'd first want to see price action to draw towards this bearish order block, right? After taking these buy stops. And then eventually, I spoke through about 3 options where we'd see price either accumulate, and the second option would have to see price pull back into this fair value gap. And once we see momentum having to step in, we may continue out, or most importantly, we would want to see price draw all the way down into this mitigation block, right? So we've been talking through that for these past few weeks, and then eventually we got that draw all the way down there. And then from here, what we want to see is a continuation towards the buy stops, these relatively equal highs, and then eventually our long-term draw all the way up there. So in terms of the dollar alone, we understand that the dollar in a long-term perspective, the dollar is bullish, right? So just to talk through the reasons why this mitigation block was very important is because we understand at some point over here, smart money had to sell this candle as to bring price all the way down here into this fair value gap, right? And once we started to see price trade above that point, we understand that those sell orders are in loss, right? So what would happen is in future, you'd want to see price go all the way down there and mitigate those sell orders. Once mitigated, we'd want to see new buying pressure start to step into the market. And that's exactly what we started to see on the NFP, right? 3rd of May, NFP candle over there. So already we're getting an idea that we're continuing to the upside. We broke above this fair value gap, so we're starting to see that these PDRAs that are suggesting that price should go lower are starting to fail, right? Such as that fair value gap. And we see price drew a bit higher into this bearish order block over there, and then we drew back into a fair value gap. And the good thing about this fair value gap as well is, if you notice the candles, they respected the high of this candle, right? We didn't get any close below that point. We completely filled the fair value gap, but we didn't get any candle closure below that point. So it's suggesting that it's a very strong institutional resistance point that we then want to see price continue towards the upside, right? So based on that narrative alone on the daily time frame, we're already getting a gist of, or an understanding, that price would then want to continue towards the upside. We may see a draw towards this point over here. Maybe we may take the liquidity below this candle's low. Who knows? That there is a likelihood for that, right? Remember, we are investigating different ideas, but as things stand, I see this fair value gap potentially holding, right? And having to continue to the upside, right? So with that being said, let's go on to the H4. Okay, cool. So on the H4, of course, there's a lot more information over here. And just to come back to the mitigation block, right? Because we spoke through, having to see price go all the way down there a few weeks ago, and then we eventually price reached there. And the reasoning for having to see price draw here, and then having to see the mitigation block become a very strong institutional support zone, was due to the fact that we saw that at some point smart money was holding price at a premium, forcing us to continue buying it at buying it at a premium, and then eventually they took the buy stops above that point, sold at a premium, the premium. It only made sense for them to take profits at a discount, right? And what is at the discount price? We have the mitigation block, we have the daily fair value gap there, and we also have these discount sell stops. So the moment we reach the mitigation block and then mitigate those sell orders that they took over there, they're going to be buying against these sell stops, right? And hence, that's how we started to see the market start to push towards the upside, right? So what we started to see, we saw a large rejection over here, price pushed up, came back. We see that price respected this rejection block. So essentially, what the market did was it took the liquidity below the bodies of the candles. It wasn't interested in the wicks. It took the liquidity below the candles, respected that, right? And then we started to see a market structure shift, indicating the potential likelihood of having to see, price now start to continue bullish wise, right? And as we continue bullish wise, what we then started to see is price then filled this liquidity void, right? We'll see it much clearer on the H1 time frame, but there is a liquidity void here, an inefficiency in price. So one thing we understand about price is that it's always trying to fill in inefficiencies, right? So that pull back towards that order block was having to see price fill in the inefficiency, which also made this bearish order block very strong. That's why we got this reaction off of it, right? So we get a reaction back into the daily fair value gap, which is that over there, and into this H4 bullish order block, right? And of course, we'll further investigate that on the H1 time frame. And another thing as well, if we just bring this over here, we understand that price having to draw into this bearish order block. What happened was price is also, which is cool, right? The fair value gap being the low of the fair value gap and the equilibrium point, right, are in alignment. And price just tapped right below discount prices, respects the equilibrium, closes above that point, right? So we're also getting an understanding that this order block could potentially be a very strong institutional support zone, right? And off of that point, we might see the likelihood of having to then see price continue towards the upside, right? But that's not to say that we may not see price continue towards the downside, but just based on what I am seeing today and all of the confluence, I'm seeing the narrative of having to continue towards the upside. But with that being said, let's go on to the H1. Okay, cool. So on the H1 time frame, like I spoke about the liquidity void over there, of course, when price left the mitigation block, right? We got the market structure shift, institutional order flow on our smaller time frames now is completely bullish, right? And price continued higher as to reach the liquidity void. Now, the liquidity void was essentially us having to see, an accumulation in price action. Then we saw heavy movements towards the downside, right? We just see these black candles. That's an inefficiency in price, right? So eventually you want to see price go all the way up there and fill those inefficiencies. These are also areas of fair value, which means what? And I spoke through this in my previous videos. I will attach a link to that. An area of fair value is essentially a point where smart money will be looking to scale out most of their positions or some of their positions. So we understand at this discount price, they were accumulating longs. Back into discount prices, they're accumulating longs, right? So areas of inefficiencies are where they're going to start booking their orders or scaling out their positions. That's why you'll start to see price accumulate in areas like these, right? And that's when we also start to see the weakness in price, right? Once that inefficiency is filled, right? So they bring it back all the way down here into our bullish order block, right? And what we're seeing now on the H1 time frame, like I spoke about this on the H4 time frame, how this area over here has become a strong institutional support zone. Another thing we can note is we received a bit of accumulation over here, and then what happened? We see price spike all the way down, takes the sell stops, right? We can also see there's an alignment of the H4 timeframes order block, bullish order block, with the H1 timeframes bullish order block. But most importantly, we see order pairing occurred over here, essentially meaning what? Smart money has bought against these sell stops, right? And then immediately after that, we see a heavy, bullish candle towards the upside. What does that candle do? It breaks this candle's high. Why is that significant? That's significant because this gives us a change in state of delivery, right? The moment you get a change in state of delivery, that's the moment you understand that now you formulated a bearish order block in this instance, right? So then we start to see price pull back into this order block. We see price respecting the middle point of that order block. Anytime you see a order block and price is respecting the middle point, either spikes through it and closes above that, immediately you understand that that is a very strong order block. So there is a likelihood that this order block will hold and we'll start to see price continue bullish wise, right? But let's go on to the M15, right? Okay, cool. So on the M15, after the sell stops were taken over there, right? Heavy movement towards the upside, a lot of volatility stepped in. That's an indication that smart money is actively buying, right? They bought against these sell stops, right? We're starting to see heavy displacement towards the upside, market structure shift. Then what happens? We pull back into the H1 uh, order block, as well as a M15 fair value gap, right? Another important thing, a strong institutional uh, support zone is this break over here, right? We understand at some point smart money had to sell this candle, which resulted in this move towards the downside, and then they bought here, right? So the moment price is trading above that level, what is happening? Those sell orders are in loss. They bring it back there to mitigate those sell orders and to reinstate new buying orders, right? So eventually we'd like to see price continue towards the upside. So there is a likelihood that we will respect all of these confluences and continue trading bullish wise on the dollar, right? But with that being said, let's go on to GBPUSD. So on GBPUSD, we understand that for a long period of time, we continue towards the downside as to take these sell stops over here. And our anticipation for these past few weeks was to see price continue as to reach into premium prices, right? And so we did. We reached this daily premium fair value gap, right? And off of that level, we then wanted to anticipate price having to continue its narrative, which is bearish, right? We understand that in terms of GBPUSD, we are completely bearish and our long-term draws are all the way down there, right? So, but speaking on this week specifically, right, after taking that premium fair value gap, right, we understand that smart money in this point or this place over here, right? the fair value gap. We understand at this point, smart money is constantly selling at a premium price, and it only makes sense for them to take profits at a discount price, right? So once we look at, you know, this leg, we understand that whatever is resting in discount prices is the daily fair value gap, the discount fair value gap. So if you're going to be selling at a premium, right, it only makes sense for you to be taking profits at a discount. So our draw on liquidity this week is towards this daily bearish fair value gap, right? And if we get more confluence, of course, we'll then continue price action towards that point over there, which would be our second objective, right? But of course, that's more long term. So of course, after reacting to that premium fair value gap, we got a market structure shift over here. We see daily sell stops get taken. That is considered as external range liquidity. We then want to see price draw towards internal range liquidity, being this daily fair value gap. We see how we completely filled it, but we rejected it, right? We didn't see any candle closure above that point, right? Which gives us an indication that this is potentially a strong institutional resistance point, and we'd like to then see price continue drawing towards the downside as to reach the sell stops and then eventually our discount fair value gap. But with that being said, let's go on to our H4. Okay, cool. So on the H4, just for more confluence, right, on why that daily fair value gap is very strong as well, we see on the H4 we do have a breaker over here. So we understand that price had to reach that point over there as to mitigate the buy orders, right, and to initiate new selling, right? We also understand that at this point we took premium buy stops, right, over here, premium H4 buy stops, and essentially we then want to see price sell against these sell stop these buy stops, or order pair against that, right? So immediately when price starts to give us an indication that we're going towards the downside, right, all of those confluences as well become even more stronger, right? We are more convinced that price is continuing towards the downside when we received the market structure shift on the daily time frame over there. We got the H4 market structure shift over there, right? So we take these sell stops. The draw is then towards the H4 bearish order block over there, right, which is in confluence with this daily fair value gap. So off of that level, we then want to see price continue drawing towards the downside. So let's look at the H1. Okay, cool. So, we've been talking through for the past week, how we then want to see price draw all the way up here. And of course, we have spoken through the reasons in which why we wanted to see price draw all the way up here. I will link a video to that. And we spoke through how the importance of having to fill this liquidity void, right? And once we reached there, we saw how these buy stops were taken. And then on Friday, this is where we then also got the indication that now we continuously going to be seeing price want to draw towards the downside, right? So with that being said, in today's, not today, but this week's trading, we may see that continuation towards the downside. There is also a likelihood, right? I do have this line over here. If this H4 and this H1 order block, bearish order block is fails, right, we may see price draw all the way up there as to take these buy stops, right? And then we'll get a continuation towards the downside. So we already understand that when it comes to the DXY, we understand that we bullish on the DXY, right? On the GBPUSD, we're getting confluence that we might be seeing price continue towards the downside, right? So both the DXY and GBPUSD are aligning in terms of confluence, right? We spoke through all of these things, why we wanted to see price draw all the way up here, and last week Friday's trading, right? The video I did on Friday, and we spoke through the sell, right? The confirmations and everything that I took over here. I will link that. In fact, I will show you guys. Okay, that was the video, and this was it. The selling opportunity on Friday's trading, right? And there's still more confluence of us having to see price continue towards the downside, right? If you're going to be looking at GBPUSD, and this is the DXY, in terms of just SMT divergence, right? Look at this. We understand that at these specific points here, the DXY took the sell stops all the way down there. However, over here, price did not continue higher to take the buy stop. So that's just more confluence in us having to see price continue towards the downside. But with that being said, kind regards, the architect.